Welcome guys, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly content. Okay, so I felt the need to do more on to dwell more on the live trade experience series, and this way we can get a better understanding on the application of both the 2022 ICT model and the ongoing uh, ongoing advanced model. Okay, so like I made mention in my in our previous lesson, I'm going to try and make room for a weekly outlook video. Okay, I'm going to make room for a weekly outlook series. Okay, so I'm actually planning a live session with the community on Telegram. Okay, so if you want to join the live session, Telegram group link is always attached to the description of this video. Okay, of all our videos, our Telegram group link is attached to it. Okay, so you can just click on the link to join our Telegram group. Okay, so this is an episode on a step-by-step trade breakdown analysis. Okay, so I'm going to walk us through what goes through my mind when I'm trading. Okay, when I'm trading, what goes through my mind. Okay, this is a step-by-step trade breakdown analysis. Okay, so with that said, let's get down to today's business. All right, so this is obviously the DSY. Okay, this is the dollar index. Okay, so now there are two things I normally do um with this asset. Okay, one thing is that most of the time I use it as a benchmark. Okay, I use it as a confirmation on my directional bias in terms of other assets that are paired against the dollar. Okay, for example, the euro USD, the GBP, Great British Pounds USD, the Aussie dollar, and the rest. Okay, so most of the time I use the DSY as a benchmark. Okay, to confirm my directional bias, and most of the time I trade it as an asset. Okay, I trade it as an asset class. Okay, I trade it just like I trade other pairs. Okay, so in today I actually did a little bit trading on it, and this was a trade that I have I did the analysis some few days back, and it actually came into play today. Okay, so I took the entry and I'm going to walk us through. Okay, so you might want to pick up your chart and do some annotations just like I have done. Okay, obviously as you can see, price is reaching for the fair value gap. Okay, so what I actually did here was that we had a stomp hunt, right? We had some run on liquidity, then we had a shift. Price was obviously bearish. Okay, as you can see, the sell side of this trend was being delivered, right? So currently the market is going into the buy side liquidity. Okay, currently the buy side liquidity is being delivered right now. Okay, so the sell side has already been delivered, so we are currently in a buy market program, right? So now what I actually outline, as you can see on this chart. Okay, we had a stop hunt, right? Then we had this shift in market structure to the upside, then a short-term retracement. Okay, then we had another break of structure higher. Okay, then we had price make a deep retracement, right? Goes a little bit below this short-term low, grabs liquidity, and took off again. Then we had this short-term retracement, and of course, as you can see, we had a break of structure to the upside. Okay, creating a higher high. Okay, so price resume its bullishness from this moment, from the moment it broke this high, this short-term high to the upside. Okay, so now I actually made this annotation. I just made the analysis. I just made the annotations on ground. Okay, so I made it a few days back before today. Okay, so I made when I actually drew out the annotations when we had this break of structure. Okay, so I outlined this fair value gap, and as you can see, we had a fair value gap, obviously at the premium side, okay, and we also have an old high right here, okay. So obviously I was expecting price to reach for that fair value gap and maybe probably reach for this old high, okay. So but the fair value gap was my initial target, okay, it was my target, and I had lined this out before this whole move, okay. I didn't do these annotations today, I did it on ground, okay. So I was expecting the dollar to reach for this fair value gap, okay. So now obviously it happened today, okay. There were time before today I didn't look at the dollar, okay. I actually decided to look at it today and I saw the move, okay. So before today it was just respecting the fair value gap. You can see the bodies of the candles staying above the fair value gap, right. We only had the wicks going in, so this was liquidity be engineered, okay. You can see it created a form of double bottom, right. So obviously today we had this huge run on the sell side liquidity resting below here, okay, trading into the fair value gap at the same time into this order block, right. So this was what gave me the setup for today. So let's look at what happened on the lower time frame, okay. So this is the lower time frame, right, and what I'm actually doing here is the combination of the advanced model and the 2022 model and the 2022 model, right. Okay, so this is the concept of time, right. We have, so I was expecting bullishness, right, and we had, this is my London Q zone and my New York Q zone, okay. So this obviously is my 12 a.m. midnight opening, okay. So this is my 12 a.m. midnight, okay. So notice we had this equal lows, right. We had price bounced off the top of the fair value gap, came back and bounced off twice, okay. So obviously this looked like a support level, a retail support level, right. So and we had a huge run above, below the equal lows, right. So those that had their sell stop below here, the sell stops were activated, and those that went long, okay, they went long, or probably trade their stop loss to these old lows, were taken out, okay. So smart money bought those, accumulated those stops, right, accumulated those stops and paired their sell stops as buy side sell side liquidity for their long entries, right. So price took off, okay. So when we add this, okay, so let's go down and look at it further, okay. So this is the fair value gap, right. This is my 12 a.m. midnight, okay. So applying the more concept of time, okay, we had this as our opening price, so this is a 12 a.m. midnight opening price, okay. Remember, if we are anticipating higher price, we should see some run below the opening price, okay. Our high probability setup is always below the opening price, right. So and obviously our as you can see, price created the protraction, okay. This is the protraction, the first move, the Judas swing, right. This is the Judas swing. So we had this low, okay, we had this short-term low, and we had this huge run on buy side, sell side liquidity, okay. Remember, until we have a shift in market structure, this is just a potential break of structure. It could be a potential, this is just a potential break of structure, okay. In other words, this is just this is just a potential shift in market structure, okay. So in other words, this could just be a break of structure to for price to continue expanding lower, okay, for price to continue declining, okay. So when this happened, this was just a potential break, this was just a potential shift in market structure, okay, until price actually shifts in structure to the upside. The market structure, our order flow is still bearish, okay. So when this move happened, I immediately made my attention immediately shifted to this old high, okay, this short-term high, right, because this was the high that broke below this short-term low, right. So obviously I was watching that, okay. So we created a lower low, right, we created a lower low, and although although we had this huge run, this manipulation in price, okay, that kind of sweeps those that went short above here, or probably trade their stop loss, or probably had their sell buy stops above here, we are tripped in, right. We are tripped in and probably taken out. So the sell stops were activated. The sell stops of those resting below this short-term low was activated on when price traded below this short-term low, right. So my attention immediately moved to this, okay. So this was a this was just an anticipated shift in market structure. Okay, so we don't know that this is a shift in market structure until this old short-term high is taken out. Okay, which is what obviously happened right here on this candle. So as soon as this candle traded through, I went down to my lower time frame to look for a possible entry. Okay, I went down to my lower time frame to look for a possible entry. Okay, now we have this price action, right? And two things are probably going to happen right here. Okay, so two things I could have done actually on this. Okay, and if I had gone below to my lower time frame prior to the shift in market structure, I would have probably gotten in earlier on the move. Okay, so I would have had, as you can see, we had this shift in market structure, right, and a return to an order block right there. Okay, so I could have gotten in earlier on the move. Okay, but remember, prior to this shift in market structure, any movement, any expansion higher is just viewed, okay, it's only viewed as a retracement. Okay, it's only viewed, should only be viewed as a retracement. Okay, so until we have price indicating that structure has changed to, to being bullish, any move be in between this short-term high and this short-term low is viewed as a retracement. Okay, in other words, until price took out this old short-term high, all this to me is I viewed it as a retracement. Okay, so I was not interested in all this. Okay, so this is just viewed as a retracement. In other words, if I had went long here and price obviously retrace higher and probably and price happens to be a retracement and reacted off this fair value gap after taking out the internal range liquidity, I would have probably gotten stop at. Okay, I would have been stop at obviously. Okay, so the benefit of not waiting for the shift in market structure on your middle time frame, okay, on your middle time frame, which is on your intraday chart, the benefit of not waiting for it is that you will get in on the move early. Okay, but the disadvantage that comes along with it is that this could just be a retracement. Okay, in other words, this could just be price. Okay, this can just be price retracing higher, takes out internal range liquidity and react off the midpoint in the premium sector and continue expanding lower. Okay, so when this happened, then I was sure that price has shifted structure bullishly. Okay, so what is my current dealing range? Okay, obviously looking at this range, the short-term dealing range, okay, we have this low to this high, so that broke structure, right, and a short-term retracement, and we had another expansion and a short-term retracement. Then we had this expansion higher, right, and we have this low taken out. Okay, and this was viewed as a run on liquidity when this old high was taken out. Okay, so until price took out this old high, if price had after taking out this short-term low right here, if price had created another low and starts retracing lower, this would have been looking at this range. Okay, would have said that structure has shifted bearishly again. Okay, but as you can see, price just went down and took out the external range liquidity and continued higher. That is why the idea of a perfect lower, higher highs, higher lows, higher highs, higher lows in an uptrend, I don't really buy that. Okay, I look at it as a form of a retail concept. Okay, I look at it as a form of retail concept because price is going to be seeking liquidity. Okay, that is just the flaws we have on market structures and the rest. Okay, because market structure will see this as a high, a low, a high, higher low, a higher high, higher low, a higher high, and this will be viewed as a shift in market structure. Okay, so there's going to be, as price is retracing, there are going to be those that are going to try to sell this because they think that price has just broken structure to the downside, not knowing price was literally reaching for an external range liquidity and continue going up. Okay, so in these cases, when we have things like this, when we have situation like this, and probably we had this grab of liquidity, what we have to wait for is what is generally known to most traders as change of character plus a break of structure. Okay, so to confirm that this kind of move are authentic, what you have to do, once you see maybe you saw a price action that has this kind of movement, okay, that probably you were expecting higher prices and an old high was taken out, and price broke, shifted in structure again. Okay, price shifted in structure again. What you have to do, this first move is known as a change of character or shift in market structure, right? What you have to do to confirm that price has really changed, you have to wait for a second break of structure. In other words, you have to wait for price to retrace it back into this range and break structure again to confirm that this trend has really changed. Okay, so you wait for a shift in market structure plus a break of structure. Okay, so obviously you can see we only had a shift in market structure here and there was no break of structure to the downside. Okay, so this confirmed to us that price just reached for liquidity and continued higher. Okay, so the same thing can, okay, no, this is not, this was actually this didn't go above the previous old high, right? So this is just a retracement. Okay, so we had this move, so price moved and broke this and shifted in structure from this short-term low, right? So this became my short-term dealing range. Okay, so when price started retracing lower, okay, so all these are break of structure, all these are break of structure because it is within this dealing range, right? So I was taking out our fib. I was interested in this fair value gap, okay, so I bought it right there. My stop loss was below this. Okay, so now you can understand the benefit of and the advantage of this. Okay, the advantage of not waiting for the shift in market structure on the intraday chart is that you will actually get in on the move on time. Okay, you will actually get in on the move on time. While the disadvantage of that comes with it is that this could be just a retracement. Okay, this can just be a retracement and you might actually get stopped out. Okay, so that is just that. And as you can see, price went off, and though I didn't hold for that fair value gap, which was my initial target, but I aimed for an old high. Okay, that was close to the fair value gap. Okay, so as you can see, we had a risk to reward ratio of 10:1. Okay, so that is just all on this series. Okay, so I do hope we have enjoyed learn one or two things from this video. Okay, so please, if this is your first time of coming across this channel, please do well to subscribe, and please make sure you check out our previous episode. Okay, we have tons of videos on this channel about ICT concepts, smart money concepts. Okay, do well to check them out. Remember, our Telegram group is always attached to the description box of our videos. Okay, so planning on hosting a live session this weekend with the community on the Telegram group. Okay, so to be a part of that, all you have to do is to join the group. Okay, and please do well to subscribe. Okay, subscribe, support us. If you enjoy our content that we are putting out, the way to appreciate us is just to support us by subscribing to this channel. Okay, so until next time, stay safe and have a good trading week.